One of the most common pieces of advice in trading is to find a successful trader and copy what they do. Learn their strategy. Follow their signals. Trade exactly how they trade. It sounds logical. If it works for them, it should work for you, right? This is the advice that's repeated in every trading community, every forum, every Discord server. Just find someone who's profitable and model what they do. On the surface, it makes perfect sense. Why reinvent the wheel when you can just copy someone who's already figured it out? But here's what nobody tells you. Copying successful traders usually leads to failure, not because their strategies don't work, but because their strategies work for them. And you are not them. This isn't about the strategy being bad, or even about your ability to execute it technically. It's about something much deeper, something that most trading education completely ignores. It's about the fundamental mismatch between who you are as a person and what the strategy requires you to be. If you've ever tried to trade someone else's system and struggled to make it work despite their success with it, this video will explain exactly why that happened. And if something I say resonates deeply, show some appreciation by liking the video and subscribing to the channel. These insights can save you years of frustration, thousands of dollars in losses, and the psychological damage that comes from thinking you're the problem when actually it's just a mismatch between your personality and the approach you're trying to force yourself into. The fundamental problem with copying traders is that successful trading isn't just about the strategy. It's not just about knowing when to enter and when to exit. It's not just about having the right indicators or the right market analysis. It's about the alignment between the strategy and the trader's personality, psychology, risk tolerance, lifestyle, time availability, emotional temperament, decision-making style, and dozens of other individual factors that make each person unique. A strategy that perfectly fits one person can be completely wrong for another person, even if both people execute it correctly on a technical level. The strategy isn't wrong. The person isn't wrong. The fit is wrong. Think about it this way. A professional basketball player has a specific playing style that works brilliantly for them. They've built their entire game around their natural abilities, their height, their speed, their agility, their court vision, their shooting touch. Everything about how they play is optimized for who they are physically and mentally. But if you tried to copy that style without their physical attributes, their years of training, their natural abilities, and their psychological makeup, you'd struggle. The style isn't wrong, it's just wrong for you. You don't have their 7-foot frame, or their vertical leap, or their reflexes honed over decades. The same principle applies to trading. Strategies have personality types and life circumstances they match well with, and trying to force yourself into a mismatched strategy is a recipe for failure, frustration, and eventually giving up. Let's start with time frame. Some successful traders scalp the 1-minute chart. Others swing trade off the daily chart. Both can be profitable. Both can work consistently. Both can generate excellent risk-adjusted returns. But scalping requires intense focus, quick decisions, comfort with rapid-fire execution, high stress tolerance, and the ability to sit at screens for hours without your attention wandering. Swing trading requires patience, comfort with overnight risk, the ability to not constantly check positions, tolerance for seeing unrealized P&L fluctuate, and the mental space to let trades develop over days or weeks. These are fundamentally different psychological requirements. They demand different personality traits. They suit different types of people. If you're naturally patient, analytical, and methodical, someone who likes to think things through, carefully trying to scalp. Because a successful scalper makes it look easy, will be psychological torture. You'll constantly second-guess your quick decisions because your brain doesn't work that way. You'll hesitate on entries because you need more time to process information. You'll feel overwhelmed by the pace because your natural tempo is slower. You'll experience intense stress because you're fighting against your core temperament at every moment. Your personality is in conflict with the strategy's requirements. No amount of practice or discipline fixes this fundamental mismatch because you're working against your nature, not with it. Conversely, if you're naturally action-oriented, stimulation-seeking, and quick-thinking, someone who needs movement and engagement trying to swing trade because a successful swing trader makes consistent profits, will make you feel like you're not doing enough. You'll overmanage positions because sitting still drives you crazy. You'll exit too early because you can't tolerate the lack of activity. You'll take trades that don't meet your swing criteria just because you're bored and need something to do. Again, your personality is incompatible with the strategy's requirements. The strategy might be excellent, but it's excellent for someone else, not for you. If you've felt this internal conflict between what you think you should do and what feels natural to you, drop a comment acknowledging it. This awareness is crucial for finding your authentic trading style. Most traders spend years fighting themselves, thinking they just need more discipline or more practice, when the real issue is that they're trying to be someone they're not. Risk tolerance is another massive factor that's completely individual. Some successful traders are comfortable risking 2–3% per trade. They can handle the emotional experience of potentially losing that much on any given trade. They can watch their account fluctuate by thousands of dollars without psychological distress. Others risk 0.5% or less per trade. They need tighter control and smaller fluctuations. Both approaches can be profitable with the right position, sizing, strategy, and win rate. But if you try to copy someone with a different risk tolerance than yours, the emotional experience will destroy you, even if the strategy is sound. If you're naturally risk-averse, someone who values security, predictability, and control, and you try to trade like someone who's comfortable with larger drawdowns and more aggressive position sizing, you'll be stressed constantly. Every position will feel too big. Every normal market pullback will feel like a disaster. You'll exit early to reduce discomfort, completely killing the strategy's edge, which relies on letting winners run. Your nervous system can't handle the volatility, so you'll constantly violate the strategy's rules to reduce your discomfort. The strategy might be perfectly sound for someone else, but your risk tolerance makes it unworkable for you. On the flip side, if you have higher risk tolerance, someone who's comfortable with uncertainty and can tolerate larger swings, and you try to trade conservatively like someone who's naturally cautious, you'll feel like you're moving in slow motion. You'll get impatient waiting for the small gains. You'll increase position size beyond what the strategy calls for because the returns feel too small. You'll add positions when you shouldn't because your natural risk appetite isn't being satisfied. You'll essentially sabotage the conservative approach because it doesn't match your temperament. Again, nothing wrong with either approach, they just suit different people. Elite traders have found the sweet spot where their strategy matches their personality. That's why they can execute it consistently. That's why they can stick with it through drawdowns without abandoning it. That's why it looks easy when they do it, because there's no internal friction. They're not fighting themselves, they're trading in harmony with who they are. But when you try to copy their approach without that natural alignment, everything feels forced. Every decision requires enormous willpower. Every trade feels like you're wearing shoes that don't fit. You can do it for a while, but it's exhausting, and eventually you either give up or unconsciously modify the strategy so much that it no longer resembles what the successful trader actually does. Another critical element is decision-making speed. Some successful traders are intuitive. They make decisions quickly based on pattern recognition, gut feel, and years of screen time that's created unconscious competence. They don't need to consciously analyze every factor they see a setup, and they know. Others are analytical. They need time to process information, evaluate multiple factors, consider various scenarios before acting. They're uncomfortable with intuitive leaps. Neither approach is better, they're just different. They're how different brains naturally process information and make decisions. Intuitive traders who try to copy analytical traders feel paralyzed by too much analysis. They lose their natural feel for the market. They overthink entries. By the time they've completed all the analysis the analytical trader does naturally, the opportunity is gone. They're trying to slow down their natural fast processing, and it feels wrong. Their strength is rapid pattern recognition developed through experience, but they're forcing themselves to consciously analyze every detail. This kills their edge. They become worse traders by trying to trade like someone whose brain works differently than theirs. Analytical traders who try to copy intuitive traders feel reckless. They don't trust quick decisions. They feel like they're guessing. They need more confirmation, more data, more time to think. But the intuitive strategy doesn't allow for that. Delay, it requires acting on the pattern when you see it. So they're constantly uncomfortable with the process. They'll hesitate on entries or second-guess decisions because they don't have the analytical backing they need to feel confident. The strategy might work brilliantly for the intuitive trader, but for the analytical trader it feels like gambling because it doesn't match how their brain wants to process risk-based decisions. If you're still watching at this point and this is resonating, hit that like button. It helps other traders who are struggling with this exact issue find this message. The algorithm rewards early engagement, and videos like this need to reach people who've been spinning their wheels trying to copy approaches that don't fit them. Lifestyle is another factor nobody talks about, but it's absolutely critical. Some successful traders can watch charts all day. They're either full-time traders with no other obligations, or they have flexible jobs that allow constant market monitoring. Others check in a few times a day and that's it. They might work full-time jobs, have family obligations, run other businesses. If you have a full-time job and you try to copy a day trader who's glued to screens for 8 hours executing 20 trades per day, it's impossible. You don't have the time. You don't have the focus. You don't have the flexibility. The strategy might be profitable, but it's incompatible with your life circumstances. You miss setups. You can't monitor positions properly. You're always playing catch-up. The strategy isn't the problem. The mismatch between the strategy's time requirements and your available time is the problem. This is why so many retail traders struggle with intraday strategies. They're trying to trade like professionals who have no other obligations, but they're squeezing trading into lunch breaks and after work hours. They miss the best setups that happen during market opens. They can't monitor positions throughout the day. They're always partially focused on their job while trying to trade. They're set up for failure not because they lack skill, but because they lack the time availability the strategy requires. They'd be far better off with swing or position trading strategies that don't require constant monitoring, but they're trying to copy day traders because that's what looks exciting or profitable. Another psychological element that's deeply personal is how you handle losses. Some successful traders shrug off losses easily. They're naturally emotionally detached from outcomes. They can take a loss and immediately move on without emotional residue. They just don't feel losses intensely. Others feel losses deeply. They experience real emotional pain but have developed systems and processes to manage that emotional response, so it doesn't affect their trading. If you're someone who feels losses intensely and you try to copy a trader who takes frequent small losses without emotion, you'll be miserable. The emotional toll will be too high, even if the strategy is mathematically profitable. Different trading styles also have different drawdown profiles. Some strategies have small, frequent drawdowns. You're wrong often, but the losses are small. Others have rare but larger drawdowns. You're right most of the time, but when you're wrong, it hurts. If your psychological makeup can't handle the specific drawdown pattern of the strategy you're copying, you'll abandon it during a normal drawdown period right before it would have recovered. You'll blow up or quit during the normal variance of the strategy because your nervous system couldn't tolerate that particular type of pain. This is why understanding yourself is more important than understanding strategies. If you don't know your risk tolerance, your patience level, your decision-making style, your emotional patterns, your lifestyle constraints, and your psychological limitations, you can't evaluate whether a strategy will actually work for you. You're just guessing. And most traders guess wrong because they're attracted to strategies that seem impressive or profitable without considering whether those strategies match who they actually are as human beings with specific personalities and life circumstances. The trading education industry makes this worse by selling strategies as if they're universal. This strategy works in any market. This method is perfect for everyone. Just follow these rules and you'll be profitable. But this ignores the human element entirely. Strategies aren't universal. They work for specific types of people in specific circumstances. What works brilliantly for an aggressive, full-time intuitive trader with high risk tolerance will fail miserably for a conservative, part-time analytical trader with low risk tolerance. Not because either trader is better or worse, but because the strategy doesn't match the second trader's reality. I've seen countless traders achieve success only after they stopped copying others and started designing approaches that matched their own personality and life situation. They took elements from various strategies, tested them against their own psychology and circumstances, modified them to fit who they actually are, and created something that felt natural to them. It might not look impressive to others. It might not be what the gurus recommend, but it works because it's aligned with who they actually are. There's no internal friction. There's no constant battle between what the strategy requires and what feels natural. They're finally trading in harmony with themselves instead of fighting themselves every day. If you felt like you're forcing yourself to trade a certain way and it never quite feels right, that discomfort is information. It's your psychology telling you there's a mismatch. Listen to it. Stop trying to force the fit. Instead of trying to change yourself to fit the strategy, consider changing the strategy to fit yourself. This isn't about making excuses or avoiding growth. It's about working with your nature instead of against it. Professional athletes don't try to play positions that don't match their physical attributes. They find positions that leverage their natural strengths. Trading should be no different. Another reason copying fails is that you don't see the full picture. You see someone's winning trades on social media, you see their public performance, you see their profit screenshots. But you don't see the losses they took to get there. You don't see the years of development and refinement. You don't see the psychological work they did to become comfortable with their approach. You don't see the failed strategies they abandoned before finding what worked. You don't see the personality traits that make that particular approach suitable for them. You're trying to copy the end result without understanding or going through the process that created it, without having the psychological foundation they built, and without having the personality match that makes it work. This creates unrealistic expectations. You expect the strategy to work immediately because it works for them. When it doesn't, you assume you're doing something wrong. You tweak it, you modify it, you abandon it, you try something else. You never give anything enough time to work because you're comparing your beginning to someone else's middle or end. You're comparing your first month, trading their strategy to their 5th year trading it. You're comparing your uncertain execution to their confident execution, built over thousands of repetitions. The comparison is completely unfair to yourself, but you don't realize it. If this pattern sounds familiar and you've been caught in this cycle of copying and abandoning strategies, leave a comment acknowledging it. Sometimes just naming the pattern is enough to break free from it. You're not the problem. The approach of copying without considering fit is the problem. The traders who succeed long-term are the ones who eventually stop looking externally for answers and start looking internally. They ask themselves, what type of trading actually feels natural to me? What level of risk can I genuinely tolerate without losing sleep? What time commitment can I realistically maintain given my life circumstances? What decision-making style matches how my brain actually works? Am I patient or impatient? Am I analytical or intuitive? Am I risk-seeking or risk-averse? Do I need structure or flexibility? Do I thrive with action or with patience? They design their trading around honest answers to these questions, not around what looks impressive or what worked for someone else. They prioritize fit over performance. They understand that a strategy that matches their personality and produces modest returns will outperform a strategy that doesn't match their personality but promises exceptional returns because they'll actually be able to execute the first one consistently while they'll sabotage the second one through constant internal conflict. This doesn't mean you can't learn from successful traders. You absolutely can and should, but you're learning principles and concepts, not copying exact systems. You're understanding why something works, not just what they do. You're studying their thinking process, their risk management philosophy, their psychological approach. Then you take those principles and apply them in a way that fits your unique situation. You adapt, you modify, you personalize. You create something that's informed by others but customized for you. For example, you might learn about support and resistance from a successful trader. That's a universal principle. But how you trade those levels, whether you're aggressive or conservative at the level, whether you use tight stops or wide stops, whether you scale in or use single entries, whether you take every touch or only specific setups should be based on your personality and risk tolerance, not theirs. The principle, support and resistance creates trading opportunities, is universal and worth learning. The application, exactly how you trade it, must be personalized to who you are. Another critical point: successful traders have often been trading for years or decades. They've built pattern recognition through screen time. They've developed intuition through thousands of trades. They've seen every market condition multiple times. When they make a quick decision, it might look effortless, but it's backed by years of experience that you don't have yet. If you try to make those same quick decisions without that experience base, you're just guessing. You haven't earned that intuition yet. You're trying to skip the development phase and jump straight to mastery. It doesn't work that way. This is why the path to trading success is often longer than people expect. You can't shortcut experience. You can't skip the learning curve by copying someone who's already gone through it. You have to put in the time, make the mistakes, feel the emotions, see the patterns yourself, and gradually build your own understanding. Copying someone else's system tries to bypass this process, but the market will eventually expose that you haven't actually developed the skills, pattern recognition, and psychological foundation required. You're performing movements without understanding why, and as soon as market conditions change or the slightest variation occurs, you're lost. At this point, ask yourself honestly, am I trying to copy someone because I genuinely believe their approach fits me, or because I'm avoiding the hard work of developing my own approach? That distinction matters enormously. If you're copying to avoid the work, you'll struggle indefinitely. If you're learning from others while building your own approach, you're on the right path. The good news is that once you accept that your trading must be personalized to you, the pressure lifts. You're no longer trying to be someone else. You're no longer measuring yourself against someone else's results. You're no longer forcing yourself into an approach that doesn't fit. You're simply developing an approach that works for your specific psychology, resources, circumstances, and life situation. This shift from external validation to internal alignment is liberating. You're free to be yourself in your trading, instead of constantly trying to be someone you're not. You might discover that your optimal trading style looks nothing like the popular traders you follow. Maybe you're better as a position trader holding for months, not a day. Trader churning positions. Maybe you thrive trading just one market deeply, not scanning 50 markets daily. Maybe you're most effective taking 3 trades per month with high conviction, not 20 trades per week. Maybe you need more structure or more flexibility or more time or less time. Whatever your natural style is, it's valid if it's profitable for you and sustainable for your life. The comparison trap is particularly dangerous on social media. Everyone is showing their best trades, their best months, their biggest wins. Nobody is showing the boring parts, the losses, the drawdowns, the months of mediocre performance, the psychological struggles, the doubt, the fear, the mistakes. You're comparing your complete reality, including all your struggles, doubts, and losses, to their curated highlights. This creates a distorted sense of what trading actually looks like and what you should be achieving. It makes you feel inadequate when you're actually progressing normally. It makes you abandon approaches that are working just because they don't look as impressive as what you see online. Elite traders largely ignore what other traders are doing. They're focused on their own process, their own development, their own results. They're not constantly consuming other people's content, trying to find the magic. Strategy. They're not comparing their performance to others. They've already found what works for them, and they're just executing it repeatedly while making small refinements based on their own data. This internal focus is a sign of maturity in trading. They've stopped looking for external validation and started trusting their own process. If you're enjoying this perspective and want more content focused on the psychological realities of trading that most education ignores, subscribe to the channel. This is what we focus on at Trader's Metal Edge: the personalization and psychological alignment that actually determines whether any strategy will work for you long term. Another aspect of the copying problem is that even if you perfectly execute someone else's strategy, you won't have the same conviction they have. They developed it through years of testing, refinement, and real-world application. They tested it. They've seen it work through various market conditions. They've survived the drawdowns and seen the recovery. They have deep confidence in it, built through personal experience. You're just following instructions someone else wrote. You're executing rules you don't fully understand the reasoning behind. When the inevitable drawdown comes, They have the conviction to keep trading it because they know from experience that it recovers. You don't. You haven't earned that conviction through your own journey, so you abandon it right when you should be staying consistent because you lack the experiential confidence to weather the storm. Conviction comes from personal experience. You have to see your strategy work with your own eyes, through your own trading over sufficient time. You have to survive the drawdowns yourself and see the recovery happen. You have to make the mistakes and learn the lessons firsthand. You have to develop pattern recognition through your own screen time. This builds unshakable confidence that can't be transferred through reading someone else's rules or watching their trades. Copying someone else's results doesn't build that confidence because you haven't earned it through experience. You're building on someone else's foundation, which feels unstable because it's not yours. This is why the most valuable thing successful traders can teach you isn't their strategy. It's their process for developing a strategy. How do they generate trading ideas? How do they test those ideas? How do they evaluate what works and what doesn't? How do they personalize approaches to fit their psychology? How do they build conviction through testing and experience? How do they handle drawdowns and maintain consistency? These meta skills are transferable across any strategy or market. The specific strategy often isn't transferable because it's too tied to their specific personality, circumstances, and psychology. One more critical element: energy and passion. Successful traders are usually passionate about their particular approach. That passion fuels consistency. That passion carries them through difficult periods. That passion makes the work feel worthwhile even when results are temporarily poor. If you're trying to trade a strategy that doesn't genuinely interest or excite you, you won't have that fuel. You'll treat it like a chore. You'll do it mechanically without engagement, and chores don't get done consistently enough to succeed in trading. Eventually, you'll find reasons to skip it, modify it, or abandon it because there's no intrinsic motivation driving you. Your trading approach should feel like an expression of who you are, not a costume you're wearing to be someone else. When there's authentic alignment between your personality and your strategy, trading feels natural. It feels right. Even when it's challenging, it doesn't feel forced. You're engaged because the approach matches how you naturally want to interact with markets. That's when sustainable success becomes possible. That's when you can trade the same approach for years or decades without burning out or constantly searching for something better. At this point in your trading journey, the most important question isn't what strategy should I use? It's what type of trader am I? Once you answer that second question honestly, truly, honestly, not how you wish you were, but how you actually are, the first question becomes much easier to answer. The strategy reveals itself based on who you actually are, not who you think you should be or who you're trying to become. If you've been struggling because you're trying to be someone you're not in your trading, this is your permission to stop. Stop trying to trade like the traders you admire. Stop trying to force yourself into approaches that don't sit. Start trading like the trader you actually are, with your personality, your circumstances, your psychology, your life situation. Your results will improve dramatically once you make this shift from trying to copy others to developing your authentic approach. This is Trader's Metal Edge, where we focus on the psychological truths and personalization that create sustainable trading success. If this video helped you understand why copying doesn't work and why personalization matters, subscribe for more content that addresses the real obstacles to trading success that most education completely ignores. You can't copy your way to consistent profitability, but you can discover and develop your authentic trading style that aligns with who you actually are. And that's when everything changes. That's when trading stops being a constant battle with yourself and starts being an expression of your natural strengths applied to market opportunities.